huge mortgage rules are here.
Own your life.
It seems like the mortgage rules are changing weekly lately. Let's cover all the newest mortgage rule changes and how they could impact you. First off, the newest changes we're going to cover are as follows. No more stress test for insured mortgage renewals, return of the 30-year amortization for insured mortgages, less than 10% needed for up to $1.5 million purchase, and 90% loan-to-value refinance opportunity. Starting with the removal of the stress test for mortgage renewals. This has actually already taken effect. To be clear, this specifically relates to non-insured mortgages. How do you know if your mortgage is insured or not, you might ask? Simple. Did you put less than 20% down when you purchased the property? The thought that the government forced a stress test on a mortgage that somebody already had is absurd. The stress test requires you to qualify for a rate substantially higher than the rate you actually have. This hinders mortgage holders' ability to negotiate a lower rate with a different lender at renewal time. It's rather odd that this rule came into play in the first place. As a mortgage broker, I found over the past couple of years that banks were no longer matching lower rate offers from other mortgage providers. This is widely because they were betting that the existing borrower didn't qualify for the mortgage they had already based on the stress test. In many cases, they were right. This heavily favored the banks and mortgage providers. Now, for example, if the rate is 3% at renewal, you no longer have to qualify at 5% or higher. This gives you far more options when it comes to negotiating a more favorable rate with another lender at renewal. Next, the reintroduction of the 30-year amortization for insured mortgages. This is nothing new. If you recall, back in the day, we were able to go as high as 40 years before. How does this affect you? Well, essentially, this increases the potential mortgage size by 7%, or if you keep the same mortgage size, it substantially lowers your monthly payment. To be clear, 30-year amortizations were already available for non-insured products. Are all borrowers eligible for this 30-year amortization? No. This is exclusively for first-time homebuyers and those who are purchasing new construction, aka presale. The government continues to incentivize buyers to purchase brand new properties. The question is why? My best guess is these units are not being purchased enough due to their high price tags. Also, the government stands to make a substantially larger amount of tax on new construction presales because they get to receive GST. Did you know the government sometimes now double taps and charges GST twice on new construction in some circumstances? It's happened to me personally on a listing, and I've heard of many other agents having to deal with this. Next, the biggest and most impactful change is that you can now purchase up to $1,500,000 with less than 10% down. Essentially, you need 5% for the first $500,000 and 10% for the remainder, up to just below $1.5 million. This equates to a total down payment of 8.333333% on the purchase of $1,499,999. Under the new December 15th, 2024 rules, purchase price of just under $1.5 million with a minimum down payment of just under $125,000 incurs a staggering insurance premium of $57,750. However, it's a cost of doing business, in my opinion. Let's keep in mind the income required to qualify for this mortgage is over $325,000, and you can't have any debt. What was the down payment needed before to pull this off? $300,000. So this is a substantial improvement. Considering the high cost of living in Greater Vancouver, there are a lot of high-income earners out there who don't have significant savings. Home buyers who don't have the luxury of a down payment assistance from family will find this very helpful. The mortgage industry has been asking the government to raise it to $1.25 million for a very long time. Then, out of the blue, they raised it to $1.5 million. Conveniently, this is happening during a time of extremely low voter confidence for the Liberals. Is this a good idea right now? Well, we need it and we don't. Mark my words, this will cause the market to get busier, which drives up home values. Is this for first home buyers only? No. Contact me for more details about that or comment below. Do I agree with this idea? Yes. However, it will likely drive up prices as well, causing a further lack of affordability for most. Both the 30-year amortization for insured mortgages and the allowance of the almost $1.5 million purchase with less than 10% down comes into effect December 15th, 2024. To be clear, you cannot submit a mortgage application until after this date. Last but not least, the federal government is rolling out another set of mortgage changes aimed at addressing the housing shortage, this time focusing on supporting the construction of secondary suites. Starting January 15th, 2025, Canadians will be able to access up to 90% of the home's value through insured mortgage financing to build secondary suites. This new program marks a revival of a similar initiative that was discontinued in 2016. The LTV, loan-to-value ratio, can be up to 90% of the value of the property, with the total property value capped at $2 million. FYI, the previous max LTV was 80%. Homeowners can add up to 4 units on their property, including the existing one. Each secondary suite must be fully self-contained as a unit, meaning that it has to have a separate living facility, such as private entrance, kitchen, bathroom, etc. The additional units must be long-term rentals and cannot be used for short-term purposes such as Airbnb. Do I agree with this idea of a 90% loan-to-value refinance? Yes, but the cost of renovations now and the scale of the project often kill the opportunities. So let's think about that for a minute. Considering the average home is $2 million in Greater Vancouver, definitely not Vancouver, with zero debt, you're going to need approximately $360,000 in annual income to qualify for that $1.8 million mortgage. How many families fall into that category? Less than 4% in Greater Vancouver and less than 1% in Canada. And most of them have debt, meaning you will need more than $360,000 in annual income to service the loan. The bottom line is most of these changes are going to only add fuel to the fire. The market has been relatively quiet for the past 2 years due to high interest rates, but mortgage rates are dropping fast. Investors have not disappeared. They aren't gone. They're just waiting. Immigration has been crushing records. All signs lead to an explosion in the market over the next few years, which is the last thing we need when it comes to housing affordability. Please remember to like and subscribe to this new channel if you haven't yet. If you've enjoyed this video, you'll probably like this one too. That's all for now. Call me anytime with your skill testing questions or pop them in the comments. Grab a copy of my best-selling book, Rockstar Real Estate Investing, for more in-depth knowledge. The link to purchase my book on Amazon is posted below in the description. Remember to own your life. I'm Jesse Johnson. Have a nice day.